Hey guys, welcome to another episode of Tax Talk with Joel, and in today's episode I'll be answering 7 tax questions that could potentially help you save tens of thousands of dollars in taxes. So let's get right into it. So one of the questions I often get asked is, what's the easiest way to save money on taxes? This is a great question, and honestly, there are many ways to save money on taxes. Keep in mind that the tax code is over 74,000 pages long. But if you want to know the easiest way to save money on taxes, we need to first understand who the tax laws were made to benefit. The tax laws were made to benefit entrepreneurs and real estate investors. Entrepreneurs because they create jobs, in other words, employees. Well, these employees spend money, which is known as consumer spending, which helps better the economy. The tax laws were also made to benefit real estate investors. Real estate investors because they create housing for everyday Americans. So with that in mind, the easiest way to save money on taxes is to turn your hobby into a business. For example, if you like baking cakes, well, nowadays with social media, you can easily take some pictures of your cake and try to start selling your cakes. When you do this, your everyday expenses become tax deductible. For example, your cell phone is typically not tax deductible. However, you now need your cell phone to take pictures of your cakes to put them on social media. This means your cell phone is now tax deductible. Another question I often get asked is, Joel, what's a tax write-off?
Jerry, all these big companies, they write off everything.
You don't even know what a write-off is.
Do you?
No, I don't.
But they do. And they're the ones writing it off.
So anyway, a tax write-off, once you're in business of course, is anything that is ordinary and necessary. What does this mean? Well, ordinary would mean, is this expense ordinary in your line of business? Is this a typical expense for people in your industry? And necessary would be, was this expense needed for you to make money? If the answer to both of these questions is yes, then it's tax deductible. So another question I often get asked is, Joel, what's the number one reason business owners are overpaying in taxes? There's a lot of reasons. Like I mentioned earlier, the tax code is over 47,000 pages long, so it's very easy to overpay. But if I had to say one reason that business owners are overpaying in taxes, they are not tracking their expenses. Most business owners are focused on making money, which is great. By all means, this should be your number one priority. But when tax time comes, usually most business owners are not really sure how much they spent on business expenses. So what happens a lot of the time is that they end up estimating their expenses. Well, when they estimate, they usually underestimate because they don't want to be audited. Well, if you're underreporting your expenses because you don't want to get audited, well, obviously, you're going to overpay in taxes. So what I recommend is that you have a good accounting system in place. You can purchase a subscription to QuickBooks Online for a few bucks a month and use that to track all of your income and your expenses. Next question, should I form an LLC to save money on taxes? You should form an LLC, but not to save money on taxes. Actually, the main purpose of an LLC is to provide you with limited liability protection in case you were to get sued. Its main purpose is to legally protect you. And if you're in business, you definitely want to make sure you're protected. However, a lot of people think that you need to be an LLC to start writing off business expenses. Well, the truth is, you don't need an LLC. Actually, you just have to be in business. Once you start selling those cakes, like I mentioned earlier, you get to write off business expenses. Next question, do I get to write off paying myself? So it depends. In most cases, no. The reason I say this is because most people do business as a sole proprietorship in the very beginning. Well, when you're a sole prop, what you pay yourself, unfortunately, is not tax deductible. However, once you form an LLC and have that LLC taxed as an S or a C corporation, things change. For example, one of the requirements of doing business under an LLC taxed as a corp is that you have to pay yourself a reasonable salary through payroll. Well, this would make you an employee of your LLC. Well, when you're an actual employee, then yes, what you pay yourself would be tax deductible to the business because you personally would get a W-2. Another question, why do the rich pay no taxes yet small business owners pay an arm and a leg? So this question obviously gets under people's skin, right? They hear that Donald Trump only paid $750 and they're having to pay tens of thousands of dollars in taxes. Or they hear on the news that Amazon paid $0 in taxes yet made billions of dollars in profits. Why is it that they do it but small business owners can't? Well, it's not that small business owners can't do it, it's just that they don't know how to do it. I mentioned earlier that the tax laws are incentives, so you need to know what those incentives are so you can take advantage of them. For example, let's say you had $80,000 in taxable income. Well, if you purchase a vehicle for $100,000 and you use that vehicle 100% of the time for business and it weighs more than 6,000 pounds, in 2023, you can write off 80% of the purchase price. Well, what's 80% of $100,000? $80,000. Well, what's $80,000 in taxable income minus an $80,000 deduction? $0 in taxable income. Well, $0 in taxable income means you pay $0 in taxes. Here's the best part. Let's say that you finance the entire vehicle with no money out of pocket. Well, you just got an $80,000 tax write-off with no money down. And when you go to the bank for a loan, because this deduction is a non-cash expense, in other words, depreciation, lenders would actually add it back and use $80,000 of income to qualify you for a loan. Well, these are the type of things that the rich do, yet small business owners don't take advantage of it. And last but definitely not least, Joel, when should I hire a CPA like yourself? Man, honestly, as soon as you can afford one. Yeah, you can do your taxes on TurboTax or with a tax preparer, but these options are meant for easy tax returns, meaning you just got a W-2, have a few kids, and own a house. But if you're a business owner or a real estate investor, then you need a CPA. But if you really can't afford a CPA, then that's why I created an online course called the Tax Savers Academy. It's only $97 a month, and I share all my tax secrets on how you can save thousands in taxes. Well, that's it for this video, guys. Hopefully this answered some questions you might have had. If you're interested in the Tax Savers Academy, I'll put the link for it down below. And if you're a more established business owner, we do offer a free tax assessment. Schedule yourself in for a free 15-minute discovery call by going to sandovaltax.com/YouTube. Find the link for that in the description down below as well. Thank you guys for your time. If you enjoyed today's video, please like, comment, subscribe, and hit the bell as well. Until next time, have a great day.